Hey guys, so over the last little while, I've had a fair amount of you reach out to me asking if I can make a full, in-depth video breaking down the VP Pro Plus indicator by itself. I was originally going to do just that, but the VP Pro indicator was never designed to be just a standard buy and sell indicator. It's designed as a context map by definition, right? So instead of just explaining that indicator, I thought it'd be much more beneficial for everybody if I showed not just it, but alongside it, my workflow from pre-market open to the chart to market close, order flow, timing entry, stops, targets, the whole shebang, right? So before I get into any of that, I do want to clarify something. Even though the tools in this workflow are my own, they're here for a reason. I designed them, I know what they do, why they do them, and I wouldn't constantly use them on live streams, voice chats, and everything in between if they didn't actually serve a real purpose in my own processes, right? This video is not meant to be a feature tour, even though it may feel like it at times. It's meant to genuinely show you guys how I personally think through the market, how I build context, conviction, all these different things, and how VP Pro fits into that process, turning my ideas into actual entry. Now, before I start diving into any of the details here, I do want to give you guys kind of a high-level understanding through a summary as to how all this workflow comes to be. Now, before we dive into any of the details, I do want to give you guys kind of a high-level summary of how this all works, just so that you can understand that this is not a price prediction workflow, but rather something that puts probabilities in your favor if executed correctly. The Wealth Pro Terminal gives you a broader bias in key areas to care about through GEX, dealer positioning, macro news, and other types of large, bigger picture factors. The VP Pro indicator itself shows you the high volume zones where price is likely to react from, and combining that with order flow allows you to see what's actually happening in the auction behind the scenes. Now, if price reacts at one of these zones and the broader context is supportive of a move in a certain direction aligned with my biases, I can define a tight stop loss around that level, targeting the next logical node to whichever direction it may be, because price inevitably has to move somewhere, and the goal is to make that somewhere as probable for us as possible. Now, that out of the way, what is the first thing I am doing when I wake up, roll out of bed, brush my teeth in pre-market, waiting for the open? Before I even open up a TradingView chart, I'm checking the Wealth Pro Terminal, and the goal is not to predict what's going to happen today, but rather understand what kind of market I'm walking into even before New York opens its doors. I want to know if anything major happened overnight, so I'm going to take a look at the global impact over here, see were there any major headlines that could explain overnight price conditions or that could potentially have a role in the price conditions after the open. So now that I have a bit of a clearer picture as to what's happened in the overnight news headlines, I do want to take a look at our GEX levels along with the market pulse. What this is going to tell me, specifically GEX, is not buy here and sell here. I'm using it to understand where the market may potentially be more sensitive, where it may react a little bit more, where it may be a little more supportive of continuations, rejections, or chop. And more specifically, what I'm looking at with GEX is things like the gamma flip, high gamma, low gamma zones, call walls, put walls, etc. And the reason why this matters is because these levels can help me understand whether price is actually moving through an environment where it could trend way more freely, or if we're in an area where the market is just more likely overall to slow down, reject, mean revert. Keyword likely. This is once again trying to formulate a bias and a picture to enter the market with. Now, before we move on, I do want to take a moment to point out that this TradingView script is a recent addition to the GEX module so that you're easily able to click copy pine, paste it on your TradingView chart, and not have to switch between these two tabs just to see or mark out manually where these levels are. Today, for example, not saying that I use this as an entry model. Once again, it is just bias, but we do have very clear reactions off of the gamma flip and the put wall. Anyways, moving on, we have our last section for now of the Wealth Pro Terminal being the US market pulse. Trend, volatility, participation. Pretty clear in understanding this one's purpose and use case being bias. Bias, bias, bias. That's all I really want to hammer down for the Wealth Pro Terminal until we come back to it for the order flow aspect of its use, because all of it is designed to give me a bit of a storyline almost to go into the market with, so that I'm not just looking at these levels of volume nodes as pinpoints on the chart that it may potentially react from. It may go long, may go short. I want to have a clear idea going into the market. Now that VP Pro is loaded on the chart, I want to take a moment to transition into the actual purpose of this indicator, as it is once again not a buy and sell engine. It's not telling me to go long or short blindly at every level, but rather it's showing me levels where I could expect price to react from. Right now in real time, for example, you can see price reacting around this blue dotted line, which is the previous day's high. This matters because even with all the biases that we built from the terminal, this level and reaction itself is not enough to formulate an exact entry, and that's where the order flow concept comes in. At a level like this, I want to know what's actually happening in the auction. Are we pushing through the level? Are buyers absorbing certain levels? Are sellers stepping in at certain levels? I don't know what happens without looking at the order flow feed. So once again, I'm just going to open up the Wealth Pro Terminal, zoom in on whatever level we currently rest at, and we can see that at 1082, just want to double check that here, 1082, we had to the looks of it, really aggressive buyer. Despite that, price has not been able to step up here, right? It has not been able to continue to the upside, and it makes sense because the overnight high is also right here. So at this point, I would not consider an entry. I would not rush into it, and that is the one thing that I will always emphasize to people using indicators like this one, whether it be VP Pro itself or not. These levels are constantly going to be reacted from. You need to make sure that you're not letting FOMO get the best of you in taking positions that you wouldn't look back at and be confident in. Now, because order flow is such a pivotal aspect of how I create my own entries using VP Pro, I do want to take just a brief minute or two here to visualize for you guys the basics of order flow so that you could incorporate it in a way that you see fit to your own strategy. Buying aggression, bearish absorption, selling aggression, bullish absorption seem like really difficult concepts when you're looking at a chart like this for the first time, but they're super simplistic when you understand it like this. A green bubble signifies a large amount of buyers aggressively stepping in. So buyers who traditionally place bids are willing to pay the ask. They are jumping as aggressive as could be. Now, if price moves up, then logically, a bunch of people buying something and price moving up, it's in demand. People are willing to buy it. However, if a bunch of people are buying and aggressively at that, yet the price is not able to move to the upside, somebody has to be selling passively at that level for it to be absorbed. It's the same exact thing on the sell side. Red circle signifies a bunch of aggressive sellers getting into the market, a ton of people who want to sell. If the price still isn't going down, somebody is filling those orders passively. A resting limit order or passive liquidity is often visualized as these little heat map bands, which once again seem really complicated on a chart like this, but are really easy to understand once you have this visual painted out in your mind. So once again, just to give you guys a bit more of practical insights as to how this would look like for somebody like me, I'm just going to zoom in right here and notice 1, 2, and there was originally a third large green bubble in and around this area at, I'm going to say 29, 185, like mid 180s, right? If I go back to my chart now, we can see that for the last 5, 10, 15, 20 minutes or so, we haven't been able to break above about 186, so 2 points above. Is this useful for timing an exact entry? Maybe right now, no. But in the event that this seller, this passive seller, gets completely blown through by the aggressive buyers, or the aggressive buyers get absorbed by the seller, we may inevitably see a massive price shock that we could climb in on, targeting the next node logically, which brings me into the next section. How do you determine your stop loss and your take profit targets using VP Pro? I was about to record the next scene, by the way, but would you look at that? I mean, like, this is literally textbook use of order flow. We can see that at these levels, remember, mid 180s, this is 183.5 to 191 at the very, very peak right here. We can see that there was a seller absorbing all of these orders for 15 to 20 minutes or so, even longer at this point. We saw price with 90% wick to body ratio. Then all of a sudden, we start moving to the downside. I would be willing to bet that this is pulling down to the downside, now rejecting, by the way, off of the overnight high from last session, because the seller that was passive at this level has now blown through whatever amount of aggressive buyers were stepping in. If it closes decisively beyond the overnight low, I would reasonably believe that this continues back to the downside, but I don't have enough bias right now. Even like, again, this is real time. This is a real chart right now. You could go back on replay mode and see where I'm at. I'm telling you, a lot of this stuff becomes a lot more clear as to why it happens when you have access to this type of data. Now on to effectively the final portion of this video that most of you are probably waiting for anyway, how I personally handle risk management through entry timing, stop loss, and take profit setting. Let's assume we're in a theoretical bearish bias through all our tools and workflows gone over so far in this chart. This is actually today's session, and that we're currently in this point in time that I have circled in white. What I ideally want to see is both parts of our story line up. Buyers step in aggressively near the top of the node, but fail to push the price any higher. And then sellers stepping in aggressively on the way back down right here. As we can see at 4:30 p.m., this was exactly the case. And as for failing to break above any higher, an aggressive buyer stepping in at exactly 3:55 p.m. Remember, these nodes just represent areas where buyers and sellers agreed upon fair transaction with one another. There wasn't much disagreement, and there was a shit ton of volume placed. Now, when price reaches these areas, I'm not just thinking whether it touched the level or not. I'm genuinely considering what happened. Did price try to move higher and fail? Did price try to move lower and fail? Did aggressive buyers or sellers actually have influence in the market's direction, or did they simply get absorbed, right? That reaction itself is what allows me to formulate and use my trade logic. If I'm shorting from this area, for example, I want the reaction to show that price is failing to accept higher, like we already saw, and then sellers stepping in and taking control to the downside. Because of this, my stop would go just above the point of control here, or whichever node we're currently in, because if price does not reclaim, we believe already that it has rejected this area here and that sellers have taken control by this point here. And the great thing with order flow is you could enter intra-bar. Regardless of that, we don't think it's going to move back to the upside. In the event that it does, we are willing to risk whatever it may be, less than 10 points. But now onto the take profit logic that makes this so much more viable relative to these same stops. For my take profits, I'm not choosing random levels. I'm looking for the next logical areas plural, where price may react again. That could be the midpoint of the next value area, the far side of that same area, or today's highest volume level, yesterday's overnight high, today's previous day high, right? Like there's so many different levels that you could potentially align with your trade narratives. And that's why I always recommend, especially even if you have to use micros, right? Scale out when possible. I will more often than not take, even on minis sometimes, up to 3 or 4 positions at the same time if the stop is tight enough. If not, just use 5+ micros. macros because it allows you to take flexibility in your targets. That is why I never implemented buy and sell signals for this indicator specifically, because there's no way to go about doing that. I could choose my own rules, but then anybody that uses this indicator would be forced into them. And since a lot of these concepts are discretionary and at your own choosing, you could 1000% model an exact rules-based strategy on it, but I don't want to force anybody into my own personal particular rules-based strategy. I want to give you guys more of a practical look. Because it's after hours, this is a great time to point out something really important for those of you who use this indicator but don't already know. There's a very specific reason as to why this does not, and that's again, does not plot overnight volume nodes. Because major institutions and those people who genuinely have the power to create these nodes are not taking overnight positions, or at least nowhere near the relative volume that they would during an intraday session. So it almost always will plot for you POC, HVN, and all these different things that accumulate during real-time hours, during the regular trading session rather. That said, let's pretend that this zone that I have kind of marked out here is a node. And it's a good example because this is literally the previous day's high. When I saw that we drove down very, very aggressively to the downside and then immediately stopped and rejected for 20 minutes, I'd look over at my order flow feed and see, is somebody absorbing these orders and is somebody stepping back in saying, hey, you know, we're going to move this to the upside now. We've blown through whatever order stop price from moving down to the downside any further, right? My stop loss then, assuming that this is the box, would go just beyond it, maybe a couple of ticks. I recommend always using ATR, average true range, because it's a very good way to see relative volatility for an intraday session. With that said, my next logical targets would be the HVN of today, the POC multi-session, and once again, the stop loss is like a seemingly 12-point move, but the upside potential targets are probably about 1 to 10 risk to reward. Maybe, worst case 1 to 8. So you're able to keep pretty tight stops with this. You won't always have high win rates. In fact, some of my best deployed algorithms using VP-based models similar to this one have like 20% win rates, but ridiculously high risk to reward ratios and have performed really, really well in live market conditions. That does give me an opportunity, though, to tie in one final disclaimer that none of this in any way, shape, or form is designed to be or should be interpreted as direct financial advice or any influence to make a financial decision. Please use this indicator at your own discretion. It's the same reason why it doesn't offer buy and sell signals. It is designed for you to work alongside a multitude of other tools that we offer so that you have a full context workflow and are able to see the key levels where prices transacted fairly between buyers and sellers throughout key institutional flows. I do not want it interpreted as some magical be-all, end-all indicator that will just bring you to profitability. You must be able to understand why these concepts work, much less than you would understand why you use them in the first place, right? What are they? What do they do? What tools do I need to use? How do I understand how all these things work? How do I read an order flow chart? How do I understand volume, footprint, delta even? Because that's another thing that you can incorporate into your strategy, looking to confirm a confirmation in one of these entries by a POC or HVN. I hope that summarizes the key concepts of VP Pro and honestly AMT as an entire theory in and of itself. Obviously, reach out to me personally if you want to see more of like an in-depth or maybe even less in-depth understanding or a more specific breakdown of any key talking points from today's video. I do appreciate you guys watching this through. I know I talked a whole lot for it. This is going to take me like 6 hours to edit, but I just want to make sure that I went in enough depth. If you just skipped to the end of the video, full workflow is build a bias, wait for price to reach an important area, read the reaction through order flow, define your invalidation, and then target the next logical area aligned with your narrative developed through GEX, broader market context, intraday volume nodes, and much more.